recording here. Um, hmm. All right, guys. So I just want to drop in here today, and for a couple of reasons, I wanted to test out my live feed stuff because I just got approved to start live feeding on YouTube. I've got kind of like a new monitor desktop setup going. Um, Also wanted to drop in and let everybody know my phone is currently completely out of commission, so a lot of my YouTube shorts and stuff are going to be paused until further notice, which I believe I'm supposed to get a new phone around February 3rd, February 4th. So it's looking like I might be able to start doing some more shorts and just videos of basic life out here off grid, and continuing that stuff a little bit later on. But we do have live feeding open now. I'm not exactly sure how I want to dive into my live feeds. If I want to start doing like a daily live feed every morning for the New York Open, I think that's what I'm going to do. Maybe 3 days a week. I don't know if I'll do all 4 or 5 days a week. So we'll probably start live feeding the trading sessions in the morning, which will be from about probably 5:30 or 6 a.m. until about 8 a.m. And, I don't expect you guys to stick around or watch the whole thing. If you do, that's amazing. But it's really just so I can show you guys the trades that I'm taking, the execution methods, and also to help keep myself disciplined, right? Um, but today I figured we'd use this time to go over a few things and just show you what's helped me to start succeeding. There's still a lot of growth that can happen here and a lot of potential, but I have started receiving some payouts and being more consistent with my trading. And I just want to drop in and show you guys what that's been like and how I've been able to do that, and show you guys a few tricks and things that you may be able to implement into your own trading routines and our entrepreneurial pursuits, right? Because a lot of this goes hand in hand. So, yeah, so let's dive in. We'll go over a few things and hopefully you guys can get some valuable information out of this. So, the first thing I was going to show you guys, just so that you guys have some uh, proof that I'm actually doing what I say I'm doing, I figured we'd dive in here and go over a few of the payouts that I've taken in these accounts. You can see over here, just being transparent, these are past challenges. It took me, I mean, I've been trading for 3 or 4 years now, and I think in my 3 or 4 years, I've only pulled out like 4 or 5 payments and, 10 to about 10 grand or so out of the markets, as a prop firm trader. Um, so yeah, like it took me probably almost 2 to 3 years to get my first payout and to actually start understanding what the markets were, what prop firms were, and understanding how to trade. Um, and trading is it's a hard career path, right? But it's very rewarding once you start to figure it out. But I want to dive in here. So this is the first payout I pulled on this account. You can see the first one got refused. This was my first attempt, and it's kind of funny because this first attempt at getting a payout down here, I had um, about $2,500. Oh, or actually, I take that back. I think I had like $1,600 to $1,800 in the account. And in these past accounts that I used to trade, you had to pass a test phase and you didn't get paid for any of that test phase. Then once you pass the test phase, they restarted you in a new account, and you can start pulling payments out of that new account. And this is 50K accounts that I trade. And so after I passed the first account, I got into the second account and I finally got some money up in there. I think at one point I was sitting up there like 2,500, 3,000. I was like, and I didn't pull a payout out. And I should have. And then I started getting on a losing streak in that account and not having the emotional discipline that I have now, not understanding how to do things. Because this was from probably a year ago, almost half a year to a year ago, and probably more like a year ago, yeah. And anyways, so as I started losing, I was like, I'm just gonna pull this money out of this account and shut down the account, and I'll just start over because I just need to get a payout, right? Like I just need to feel some rewards from my hard work. And I attempted to pull this payout out, but it was over 50% of what I had left in the account. So they denied it because you're only allowed 50%. And this would have cleaned out the account. This was pretty much everything I had in there at the time. And they don't allow that, right? Because then everyone would probably do that. They'd end up losing a lot of money. And what they really want to see is consistency, right? They want to see consistent growth and consistent profitable trading. They don't want to see people that are just doing crazy trades, making a big amount here and then, losing a bunch here, then getting lucky again. They want to know that you actually know how to trade. And and at that time, I did have some strategies and some techniques, and I was able to understand the market and read the market a little bit, but I didn't have the emotional discipline and the trading discipline part dialed in yet, which is like, hey, you lose so much in a day, you quit trading. Like you lose so many trades, you quit trading. And I had this tendency to go into what I call a death spiral, and that death spiral has punished me many a time. At one point in time, I made it onto the trading floor with T3, and I was no longer a prop trader, but an actual floor trader with T3. And it took me almost probably 6 months to get cleared through them to get onto the trading floor of trading in their prop account. And I finally remember when I made it to the trading floor and I was sitting down in Costa Rica, and I got warned by them. They said we shouldn't start traveling as soon as you go into our trading floor. Like you still need to be in a stationary place, and you need to have routine and all these things. And I was like, no, like this is why I started trading because I want freedom. And if I can't trade while I'm traveling and this and that, then it's not worth it. And and I should have listened to the experts, and I should have waited until I had more consistency and more just understanding of the markets and they warned me, and I ended up I already had these plans to travel, and I was sitting in Costa Rica, and I just started trading in this new account, and I had an $8,000 drawdown. I mean, this was an opportunity for me to make a lot of money, and um, and I remember sitting there, and this death spiral thing is something I've really battled with since I started trading, and I think I'm finally past that point. I still go into many little death spirals, but it's like I know better to let it get past a certain point. You know what I mean? It's like there's a switch in my brain now that says, "Oh, you've crossed that point. All right, stop." And it's just because I've it's pain is the best teacher, right? And it's like once you've experienced that pain enough times, like you learn you don't want that pain anymore. And anyways, back to the story. I was sitting in Costa Rica, and at the time I was trading gold and crude oil, and I have this new rule that I like to follow now, and it's called don't step in front of a moving train. And what I mean by a moving train is, have you ever seen like gold or crude oil or any market really just start skyrocketing out of nowhere? I mean, making bigger moves than you've ever seen, like at least in the past like several days or couple of weeks, and it just starts like shooting, shooting, shooting. And so in the back of your mind, you're sitting there watching this market move, and you're going, well, it's got to come back at some point, right? Like the market never, this is an unusual pattern. Like it's going to retrace. It's going to retrace. Like I know it's going to retrace. And so you start just trying to pick the top and pick the top and pick the top or pick the bottom if you're trying to get long in on a big short, right? And so you just keep trying to pick it. And that train just keeps going and going and going. It's like that train has no destination. It's just full-fledged moving forward. And I'm sure if any of you have traded or been in the markets, like you're aware of this concept and you've seen this happen, and you've probably been a victim to stepping in front of the train because I think we all experienced that lesson. And so, anyways, I'm sitting in Costa Rica. Um, the hostel that I was staying at didn't really have like a good work environment. It had this upstairs area that was like a deck, but it was, 80, 90 degrees. Sun was kind of like shining right in there. It didn't have a lot of shade. And so I'm just like not in the best environment. There's like people walking around in the hostel and all these things. And, my ego at the time was very much like, oh, I want to be making big money doing this and traveling and stuff because it like, like feeds me. It's like, oh, like I'm a big guy and I'm making tons of money and I can go travel here and do this and I can make what people make in a week in an hour or two, and I can do it in Thailand, I can do it in Costa Rica, and I think all of that's good and well, and I still want to achieve that. But I think at the time I was doing a lot of that out of like ego. Like I wanted to be this person and I wanted to almost show off with it, right? Whether I was actually showing off with it or not, like it was just like that inner confidence, ego kind of working up inside of me. And I remember like a couple days prior, like I was kind of back and forth. I'd like made 1,000, lost 1,000, made 2,000, lost 2,000, and I'd been trading in the account just a couple of days since I got down there, and I hadn't really made any money. And I really wanted to get that first payout, so I could really just feel that, make it real. Like, oh, I'm really on the trading floor. Like I really have the potential to make money. I just really wanted to feel that the realness of it. And anyways, crude oil started just popping off. I mean, popping off, and it was just skyrocketing, skyrocketing, and it was out of the normal. And I didn't get on board the train. I kept stepping in front of it, and I lost 1,000, lost 2,000, lost another 1,000, lost 2,000, and before I know it, I had completely just lost all control of what I was doing. I became pissed off, upset, wasn't actually there mentally, and just I don't even think I realized what I was doing. Like I really don't. Like I think those chemicals had just taken over my brain. Something had happened, and I just kept taking the hits over and over again, thinking it's gonna stop. Like I'm gonna make a big one. I'm gonna catch this return, and I'm gonna win all of this back. And I literally reached that $8,000 drawdown in like an hour to 2 hours, just trying to step in front of that train. And I hadn't been on that trading floor with that company for more than like a week or 2 weeks before that happened. And and yeah, so here I am in Costa Rica, and all of a sudden my hopes and dreams just got completely stripped away from me. And and I lost it. And I remember going outside, or well, I was already outside, but walking down and just laying, there was a mango tree that was there. And I was just so distraught and I didn't know what to do with myself. And I remember literally going and laying down underneath this mango tree, and I laid there for 6 or 7 hours. And I went through every emotion and every thought that you could possibly think of in that 6 to 7 hours, just laying under a mango tree and looking up. And yeah, and that was probably one of the most painful experiences that I've ever had in trading. And this was almost 2 years. Yeah, I don't know. I'd have to look at dates, but it definitely was a while ago. It was when I went to Peru and Costa Rica. So if any of you are familiar with my travels, you can kind of look back. I believe that was, yeah, it was actually almost 2 years ago. So now that I'm thinking about it, yeah, 2 years ago, because it wouldn't have been last February. It would have been the February before that. So February would make 2 years since that occasion happened. So I guess I was a little bit wrong on my dates earlier, but it had been 2 years since that had happened. And obviously I wasn't ready. So, anyways, that's a little story about the trading floor, and how I've experienced some payouts and stuff before, and I've gotten to there, and we dropped back into here where we've been looking at the monitor, and I just want to go over, this is the more consistent, newer version of me trading. And as you can see, I have achieved some actual payouts through Trade Funder. I'm still technically a prop firm trader now. I'm not on the trading floor. I'm prop firm trading with Trade Funder, who partners with T3, who also partners with Trade with the Pros. Traded with the Pros is a professional trading platform on trading education. They hire coaches. They help you get to success, right? And I've been working with them for going on 3 years now, doing their programs, working with their coaches, and really just trying to dial in. And it also allows me to partner with Trade, or work with Trade Funder and T3, and build that relationship up so that they can see my growth and hopefully eventually move me back up to the trading floor once they've built some trust with me and see my consistency, right? So just to give you guys a visual, a little bit confirmation, here is my payout certification. It's signed by Jason Love, payout for Sire Skillcrest, 960 bucks. It's a legit payout certification, right? Like it's proof of concept. Um, and as you can see, I've taken 3 of these out officially with them. And just to dive into this account a little bit, and I realize that this isn't going to look like much to you guys. This is less than most people make on a day-to-day basis working. But what I've discovered with this, and a big reason that I have failed to achieve my success, is because I wanted this to make more than a normal job from the beginning. I wanted it to immediately feel like it was worth my time and that I was making more money than I would be if I was working a different job. And to be honest with you, I think maybe some people can achieve that if you're just, I don't know, like if you just, I don't think that most people do that, right? Most people fail. Most people don't make money at all trading. There might be, 1% that comes into trading and all of a sudden just like strikes gold and is just like working it and just has like this knack for it that no one else has, right? But generally speaking, you know, you're not going to make a lot of money trading at first. But here's the thing, trading has the potential for essentially an infinite growth, and if you learn to be patient and start off small, you can grow these accounts and when you it compounds, right? It compounds quicker than anything else. You know, you can go and work a regular 9 to 5 job, and that's amazing. And you can be making 6 figures, but all of a sudden you get to $150,000 a year and you're capped out. You're at the top of your career. I mean, I worked in masonry as a stone and brick mason for most of my life, swinging hammers, hitting bricks, hitting rocks. And one of the big things that I ran into and the big problem that I ran into was um, I got capped out. I remember by the time I was 24 years old, going to my boss and being like I want to make more money, like I need to make more money. And my boss literally saying like I can't, like you're at the top, like you can't make any more money. Like it's just like you're there. And I had been doing it since I was a child, so it kind of made sense. Like I was already at the top of my game at 24, 25 years old. Um, and I realized with masonry, the only way for me to make more money was actually to go out on my own and make my own masonry business, right? And as a third generation in family businesses, it didn't make a whole lot of sense. Like we don't compete with family. We don't go out and start our own company in the same area. Like if you want to do that, you move somewhere else, right? And it's like, okay, well, do I really just want to run masonry companies the rest of my life? And like, yeah, it's good money, but is that, do I want to spend day in and day out doing that every single day? Not being able to leave, being tied down with that responsibility of a company that I can't take with me, having to manage equipment, employees, deal with the contractors all the time. And it's just like if you've been in that industry, like it's kind of a dirty industry. Like I don't really approve of it. There's like a lot of illegal stuff that goes on with like illegal workers. There's a lot of contractors that will just screw over their subs. Use your bids and estimates and then go hire an illegal worker from Mexico for half the price. We don't have to get into all that, but like it's just after being in it, for a long time, I realized like I don't like it. I don't like a lot of the people that work in that industry. Just not a big fan. And I want freedom. I want freedom. And that's when I sold everything I own and discovered trading, right? So, anyways, before I get off topic too much, I want to dive back in here and let's do a little bit of a review on this account. So, this is the account. We're just going to look at the general gist of it. You can tell since I started, I had some decent profit coming up. So the lines that we're looking at here, this is my daily drawdown, and this is my maximum drawdown. If I hit any of these, the account is deactivated. Um, so you can see, for the first, what, pretty much first 14, 15 trading sessions, we just had constant upward movement. Just a few $100, 50, $100, $200. just nipping away at it day in and day out. Got into a little bit of a bad streak. Took a few drawdowns. Honestly, probably just having a couple of emotional days, which happens. Maybe some revenge trading in there, and then I got my stuff together. You can see I kind of like took a little bit of a break, like a no trade break, and that's what you do when you're having those bad drawdowns, right? You take a break, you step away. And I came right back and I put it right back up where it needed to be. Made two good trading sessions. Anyways, long story short, guys, you can see here I got to this point. This was after about a month of trading, and I was able to take my first payout. I withdrew 800 bucks, and when you withdraw on these accounts, it goes against your maximum drawdown, which really forces you to be so tight when you come back to trading. You gotta really control and mitigate that risk because your drawdown, your maximum drawdown, if you hit this is what disables the account. It shuts you out. Like you're done trading that account. Like it's game over, donezo. So that $800 withdrawal goes against my drawdown. They don't reset the drawdown, but they reset everything else, right? They play hardball. They really want you to work for it. So, anyways, came back into trading. I actually had some losing days the first couple of days, got pretty tight down here, and then finally snapped back in and picked it back up. Kept coming, snapped it back in, picked it back up, right? Like drawdowns, losing trades is going to happen, right? The key is to know when to step away so you don't blow the account. Um, then I came back in, made a little bit, made a little bit, made a little bit, made a decent amount, made a decent amount, bam, got the next payout. And I just got this payout. This was what I applied for yesterday, and I applied for $1,200 payout. And as you can see, that $1,200 is right here, has went against my maximum drawdown breach. And after pulling out a payout, they reset everything. So you have to have 5 consistency days of $250 to get a payout, and you have to have at least $1,250 in the account. Because my account was sitting at $2,500 approximately, I actually already have the profit target available to unlock more payouts, but my consistency days are reset. So I've got to at least get 5 of those days at $250. And with this method that they have, I actually like it. Like, obviously, we all just want, like, oh, well, I made this money, give it to me, right? But what they're kind of forcing me to do is grow the account. So after my first payout, I started with $800 in the account. After my second payout, I'm starting with $1,286 in my account. So I'm up almost $500 from the last payout at my starting balance. So the drawdown goes against me, but my starting balance is there. And so if I'm consistent and smart and I manage my risk, this is actually going to force me to grow the account. So by the time I get to my sixth payout, I should essentially be starting every time with 2 or 3 grand in the account by the time I get to that point, right? And after your sixth payout, they allow you to pull out 100% of your profits. Um, Obviously, I would probably still keep it at 50%, but the trick would be to get to that point where um, when I pull out a payout, I still have $2,500 in the account because then I always have my maximum drawdown of 2,500. And as that grows, what that allows me to do is up my risk per trade, right? And the more that you grow that risk per trade, the more your profits are. So the whole trick is to find the risk per trade that works with your strategy. And then as you get more cushion in that account, you can grow your trade size. And this allows you to grow the business, right? And hypothetically, if you grow the business correctly, you can go from $200 of risk per trade, $400 profit per trade, to $2,000 risk per trade and $4,000 profit per trade. That's 10 times what I have here, right? So if I've made $3,000 in the last 2 months and I can multiply that by 10, then that means that by the time I get to that point, I'm making 30 grand in 2 months. So it has exponential room for growth. And that's what I talk about with trading versus that 9 to 5, right? Exponential room for growth. And it's just about managing risk, understanding the statistics and understanding the numbers and moving up through that. So anyways, this is just like the basic account overview I wanted to go over with you guys. And then I want to dive into just to show you, like I said, proof of concept that I'm actually doing what I say I'm doing. And now I want to dive into my journaling concepts. So, as any good trader will tell you, or bad trader even, just any trader that really trades is going to tell you that the key to success is journaling. And it is so, so true. I refuse to believe that for my first probably 3 years. Like, I refuse to believe it. I just didn't journal. Like, I didn't even have enough discipline to journal. How sad is that? How can you expect to succeed in trading when it's one of the hardest, most disciplined things that you're going to do when you can't even have the discipline to journal your trades? It took me 3 years to understand that concept. Three. So, anyways, though, I wanted to go over a little bit. So, all of this just got shifted and changed. And I'm going to discuss that a little bit. But originally, my journaling setup, pre trading journaling is just I have two notebooks. Notebook one is just before you start your trading session, you open up notebook one, and it's just a normal journal. Like, sometimes I'll talk about trading a little bit in it, but it's more like, how am I feeling this morning or afternoon? What was my day or night like? How did I sleep? Am I happy? Am I sad? Am I dealing with a lot of stress? Just basic journaling. Sometimes it's literally a sentence and sometimes it's two paragraphs. And I just put a little note in there. It's a place just to like put things on paper, let it go, leave it there. And it's also a reference point too, because like it's like you can go back and look at it and be like, well, if every day that I journaled and I was in a bad mood, my trading was bad, well, that should tell me something, right? Then so once I finish with that little journal entry, I jump into my next journal, and this journal is just like daily reminders going into trading. It has a section and it's like morning notes, and I put that, and it's just daily reminders like what did I experience yesterday trading? What do I need to remember today? Did I revenge trade? Do I need to remember not to revenge trade? Do I need to just remind myself to follow my strategy and what I'm looking for on my trades? It's just like what is the focus of today's trading? And I jot that down. And then it has a couple sections underneath it where you can put like, took a trade on MGC today and made $400. Good trend continuation trade or counter trend trade, like just a basic note of the trades that you take in that day. And then if you want to, I don't always do this, but there's like a section for post review. But what we're looking at on the dashboard on my computer screen right now is my post trade journaling. So after a trade, I use Trader Sync. It's a little bit expensive and not be, but I got started on like a free trial a while back, and I've just kind of got hooked on it. I don't know if I'll continue it next year when it renews or not, but I really do like the platform. I love the platform. I've been getting familiar with it. I'd like to continue using it, but it's a few $100s a year, and unless my trading profits or where they need to be by September of next year, that's going to be the determining factor, right? Because essentially, I could also be doing this in Excel and saving myself a few $100 a year. It doesn't have all the AI, it doesn't run the reports for me or anything like that. But, between Excel, Tableau, and a few other things, I can probably make my own reports and stuff. It's just a little bit more labor intensive. But originally, the way that I was journaling my concepts is I would import the trades, and it has an automatic import, which is really nice as well, right? Again, it's efficient. And then I would put my setups on here, right? So this confirmation section is new, and we'll go over that shortly. But originally, it was the status, open time, open date, symbol. I think I had the exit time on there as well, whether it was short or long, what the setup was, what the mistakes were, the note for the trade, and then I implemented in this new grading technique. And my grading techniques and how I grade trades has also been completely revamped. So originally it was you just come in here, you choose your setup, and oh, I didn't mean to filter on that. I was just going to give you guys an example of what that looked like. Let's go back to that original. So originally it would be you come in here and you get a drop down of all your different types of setups, right? And I have a ton of them, 1 hour continuation. So a lot of these are new that I just recently put in here, and they weren't actually available in these. I updated it, so it updated a lot of these, but a lot of these are new concepts. Um, so originally this is how it was, and you'd pick your setup, you'd pick your mistakes, and then you'd put a note about that trade, and then you would grade the trade. And the grading system was basically following like, okay, like I have my prime setup, and did I follow that prime setup? Did I execute it to a T exactly how I wanted? And that worked really good for a while, right? Like for a while, I was pretty consistent with it. I was really journaling a lot of the trades. I was really getting that grading technique down, and it worked really well. And what was cool about it is I could click on one and filter on like just my A trades. And if you filter on just like the A trades, it shows me, oh, look, I've got a win percent of 90% by following all those A trades. And this is what the accumulative profit would be if I only took the A trades. And so it was pretty cool, and it was giving me some data, but I realized that there was also like a little bit of like a bias to it. And I was like also able to come in and it's like if the trade won, but I didn't enter it perfectly, but I was just really happy about how the trade ended, then it was like, oh, well, that was an A trade, right? It won, and it was easy to come in and give a trade an A just because it was like a winning trade. Even if I like it just wasn't great. It works, and it helped me to understand more and to dive down deep and understanding like some of my patterns that I tend to make, and some of my and like it showed me like what is actually working, like what trends, what supply and demand zones, and it really helped me to like dive in and understand what was working for me. And as we continued on, though, I started like getting some payouts. I started having some success, and I started to like kind of disappear on this post journaling. And I sat with it for a while, and I was trying to like figure out. Um, I need to refilter on this dates. That's what I want. Okay, there we go. So started to get back into it a little bit and trying to journal, but this is what I was coming to realize with my trading. I was coming to realize that I had outgrown my journaling technique, and I'd outgrown the strict straight trading strategy I'd gave myself. I'd outgrown it. And so what was happening is I would have some good trades, and I don't currently have the profit per trade in here. Let's see if we can go ahead and just show that temporarily. Um, let's do a net return on that if we can. Uh, return net. Let's put this back over. We'll just throw that in right here. Okay, so just to like look at like this return net for explain what I'm talking about here. Okay, so what was happening was I was getting some trades that were okay, some trades that were bad. I was working with some different techniques. I'd have a couple good trades, but I was like, okay, well, these two trades were delicious trades, as I like to call them. Made a decent amount of money, made some profit, but they didn't follow my traditional A setup. And so there was like this like guilt there. And I'm like, well, this was a good trade. Like I know it was a good trade, but I can't grade it as an A because it didn't follow my setup. And I'm like, but it was a good trade. And I know these were good trades because I've been watching Bitcoin for a hot minute, and I've been trading Bitcoin a lot. And it's like, well, the trend on Bitcoin has essentially been range trading, mostly downward trend with a little bit of range trading over like probably like the last several weeks, last a couple months. And and it's like, okay, well, my trend and my it's not trending, it's ranging. And there's a lot of accumulation around like 85 to $87,000. But that's not the trend. So it's not continuing the trend, but there's a lot of price action, a lot of accumulation. And every time that we drop down to like, around the 86, 87,000 mark, you can just look at the charts, and it's just like people buying, people buying, people buying. And we're getting small rallies back up to about 90,000, and um, well, I got a little area error here. Let's see what's going on. Let's see what's going on. So it's not responding. Okay, we're good. Okay, so anyways, so I was seeing these good trades happening and stuff, and they just weren't reacting the right way. Sorry, got distracted. So I was seeing these opportunities for good trades because the price was dropping in there, and I realized, oh, I could buy in at like 87,000 and ride this to 88, 89,000 because of that price action. But it went against the setup that I had as my A graded setup, and so this just was so it wasn't working. And so after just kind of trading and just continuing to trade and kind of pulling back on the post journaling because I wasn't sure how I wanted to grade trades and how I wanted to journal, I did that, reassessed, and I completely just revamped how I'm going to be journaling from now on because I wanted to take the bias out of my journaling, right? I didn't want to feel guilt coming into journal because journaling is about collecting data to see what's working and what's not working. And so if there's a bias and you're feeling guilty about this trade because this trade didn't follow what you considered to be an A trade, then but it was a good trade, then you're not going to journal properly. You're not going to collect data properly. And so with that, I came up with this new system. And I think it's best that I describe it through my Word document. Here is just to show you the image of like how I'm journaling and where we're doing it right. And it's like, here's the setups. Here's the confirmations, here's the mistakes, there's the note, and there's the grade. Um, Now that you guys have seen this, you'll be able to understand what I'm talking about in my Word document. So, also, before I trade, I like to do the journaling in my books, right? My two books, I journal in both those books, and then I'm pulling up my trading foundation plan or trading success plan, whatever you want to call it, which this has been remodified 4 or 5 times in just the last 2 months. It's constantly getting updated as I learn things. The more that I journal, the more that I keep track of things, the more I like literally, it's just been like hyper learning. It's like, oh, wait, this is true though, too. That's not true. Okay, I can adjust this, I can change this. And I think that's like with the markets, right? It's ever evolving, ever changing, and there's so much room for improvement constantly. So, anyways, let's just go over it. Let's just talk about it, and then we'll close off, and you guys can get on and do your own thing. So, trading foundation. My edge is based on reading market structure, momentum, and location, not one single pattern. I trade two valid market behaviors. You have a trend continuation, which is following an established structure and momentum, and a counter trend slash exhaustion for counter trend trading, trading reversals after exhausted moves and weakening momentum. This is what I talked about though, and I almost told myself I couldn't counter trend because that's like stepping in front of the train, right? And we've talked about that. But what I realized is I actually know enough about the markets and I've learned the markets enough to know when that train has stopped. At least maybe not every single time, but it's like there's ways of reading the market where you're like, oh, okay, like there's a train and that train is moving right now, so I'm not even gonna bother. Like I'm gonna step out of the way. I'm just gonna let that thing soar. I'm gonna let that thing do its thing. Sometimes that train soars for 2 days, but that thing will tell you when it's stopping. You'll see it on the charts. If you read the charts right, you're gonna know when that train is stopping. You're gonna know when that train's getting ready to go back to the stop where it started at, right? Um, but it takes experience, it takes time in the markets to be able to read this, to understand this, and go, oh, look at the structure that's forming. This is slowing of momentum and building of structure, and and we're starting to see the price action hitting in that structure that's showing us, oh, hey, like there's someone selling and taking profits out after this train has been running, right? It's like I can join in with them and I can also short this market now. So, anyways, my edge comes from the confluence of market structure, higher highs, higher lows, lower highs, lower lows, a break in structure, failed highs, failed lows. I love multi time frame context. I think we should always start in a high time frame and work our way down when we analyze the markets. I actually start in a weekly and daily, then I'll come down to a 4 hour and I'll analyze where that 4 hour trend is, kind of like compare it to how we were doing daily, and then because I'm holding trades for shorter time and not usually multiple days, it makes sense for me to go down to a 1 hour because we're going to do a 1 hour, we're going to refine structure and momentum. Then we're going to drop down into a 15 minute and we're going to provide some real good execution precision, right? If the 4 hour trend is showing one thing, 1 hour trend is showing us something else. Now we can start pinpointing what trade we want to take and where that precise execution is going to be on like a 15 minute. So just working down to that time frame. Sometimes I'll even drop down to that 5 or 3 minute and go, dang, like there's really been a lot of price action in here on that 3 minute. And this is just a really good key point. And I have a feeling we're going to come back up to this and we're going to pick up more sellers and more buyers and continue on. And it gives me a place to look for entry if I get that confirmation. Um, so market structure, multi-time frame context, and that supply and demand and key levels. That supply and demand is based off of time frame analysis usually, correct? Right. So we're going to look at like pre-marked zones on a daily, 4 hour time frames. We're going to refine those entries on the lower time frame, and we're going to see where that supply and demand is on those key levels. We're going to look at momentum behavior. We're looking for like expansion, contraction. Is the momentum slowing? Is it picking up? Are we getting constant buying, compression before continuation, reversal? And then this is the big one right here, right? I think once you get all of this figured out and you have your charts drawn and you have your charts marked up with the areas that you're looking for, then you're going to dive down into this price action at location, right? That can be rejection wicks. I love rejection wicks with high volume, right? If there's a rejection wick and it's got high volume, that just showed me somebody just bought in there, an institution just bought in there, and they just bought a decent amount, right? Like we've got engulfing candles. Engulfing candles show me, okay, like we dove down into that and immediately we just took over that other candle with buyers from that point. It's showing me, hey, look, it's happening there. Like that point is proving to me that there's something going on in that point and that it's a true point. It's a true price point. Um, Breaks and retests, right? Like if we get a break out of a place and a retest and we get two or three of those, like obviously people are accumulating in that price point. And that accumulation is like, again, a signal we can also enter in on that price point. And failure of patterns, right? So that failure of patterns, a lot of times to me, is more of a sign that structure is breaking. And that might be more of a warning that that location won't hold up. Um, so, anyways, once you that's more of like your entry for confirmation at what we previously discussed with that supply and demand and seeing that market structure. Then we have our risk to reward. And, when we're looking at zones and location, it's like, okay, well, if we enter here, where we're logically putting our stop, can we afford that trade? Can we actually afford that trade? And where do we think the market's going to go? And are we getting that risk to reward? Right. And it's like you can have a 50% win rate, like even with my bad trading and all the mistakes that I make all the time, I still hold a 51%, almost 52% win rate. At some points that's been 70, but I always maintain above 50 on most of the time. I'm always above 50% on my win rate. And the key to that is if you're above 50% on your win rate, then you can win your trades at a 1-to-2 ratio and you're going to make money. And if you're trading at a 1-to-3 ratio and you're winning 50% of your trades, you're making decent money, right? And so you want to make sure you can afford that trade. You know where your take profit is, you know where your stop loss is. And then execution discipline, right? Predefined risk, one position at a time. I don't like to trade multiple positions because I've noticed one trade can influence how I execute the other trade. Um, no emotional entries. My edge is not prediction. My edge is waiting for structure, momentum, and location to align and executing it with discipline. So now we get into the journaling, and I like to have this in here because how I journal also reminds me how to trade. Because if this is how I'm going to journal post trade, well then I should be trading along this setup classifications, right? So setup classification. This is when we looked at the journaling. It showed us the setup area, which is this right here, this setup column. Um, and every trade must be labeled as one of the following. TC for trend continuation, trading in alignment with the higher time frame trend, entering from supply and demand with continuation intent. Counter trend, exhaustion, trading against the short-term trend after strong multi-session momentum when and our reversal are starting to appear I think my headphones might have just they did, but my laptop is still recording, so hopefully everybody can hear me on that. And I believe so. It's showing that everyone is still reading me, so that's good. Which also means you can hear the generator in the back. I'm starting to wonder if my headphones have been recording at all. Um, so hopefully you guys haven't been listening to the generator. I live off grid in a yurt, as anyone who follows my channel knows, and the batteries were dead this morning, so we've been having to run the generator. It's not the most beautiful thing in the world, but you know, it's how we do things right now. So back into the trading. Um, we got the counter trend and trade continuation. Those are the two setups. That's it. That's the setup. You're either with the trend or you're counter trend trading. And then you have that second section that we talked about, the confirmations. And we'll take a look at those. Oh, oops, I didn't mean to do that. But anyways, the confirmations, right? For our trend, clean demand, clean supply, exhaustion, failure to make new highs, high volume candle, repeated price action, slowing momentum, strong reaction, structure. I'm going to add a few more to those as time goes on. This is a new thing. And so what that allows me to do is go, okay, well, it was a counter trend trade. Now, what was the confirmation that that was a valid counter trend trade? And it's like, okay, well, I started to get a rejection rate. Okay, first off, the first thing we want to see if it's counter trend is we had slowing momentum, right? We had slowing momentum, and we had structure starting to form. And then on top of that, we had a failed high, um, and and then maybe it was yeah, so like a break in structure, slowing momentum, failed high, um, and then maybe we had a volume shift, and then all of a sudden I got a high volume wick candle going in the opposite direction, and that was the confirmations. That's just a random example, right? And so I had three confirmations that gave me a signal that, okay, I can take this counter trend trade. And or vice versa. If I'm trend continuation, okay, well, why did I continue with that trend? Why did I think this was a valid trade? Because it was with the 4-hour trend and the 1-hour trend. There was a supply zone. And then I had a rejection wick in that supply zone, or maybe I had repeated price action in that supply zone. Um, and so you guys got to get this concept. Like then I get to put the confirmation. So here's the setup. Here was the confirmations for those setups. Those are two separate things. Now we have the mistakes. Tag any execution or psychological mistakes. And here they are. Early entries, late entry, early exit, stop too tight, oversized risk, FOMO, revenge trade, hesitation, chasing, no confirmation. Basic mistakes that we all make as traders. Then we go into the grading system, right? And so this is where it changes. The grading system is no longer based on did I follow that exact setup that I'm trying to do. It was, okay, did I execute the trade well? Did I have the confirmations for that style of trade? And so the grade is deciding by weighing confirmations versus mistakes, not by profit or loss. So an A trade was you have the setup type. It was a trend continuation or counter trade, counter trend, clearly defined. We had strong confirmations, multiple confirmations. There were no mistakes or only very minor execution flaws. Risk and emotion fully controlled. That's an A setup now, right? So A setup, that's it. That is now how we get a grade of an A on a trade. It wasn't like we took this exact setup. It was we took A setup with confirmation with very little mistakes, and our risk and emotion was controlled. That is how we grade an A setup. A B trade, good setup idea. It was a good setup idea. It all looked good. Confirmations were present, but execution was flawed. We made one or two mistakes. We still respected rules, but it wasn't an optimal trade. It wasn't perfectly, or quote unquote, perfectly executed. A C trade, we had weak confirmations. We made multiple mistakes, and there was definitely some emotional influence present. We were trading on with some emotion, not really feeling confident, didn't have the confirmations. It's a C trade. An F trade, definitely just fully emotionally trading. We had some FOMO, revenge, boredom in there. There was no valid setup classification. We broke risk rules. We broke our discipline. It's just a fail altogether. We should have never been in the market to begin with, right? So that is how we're grading these trades now. Then just to continue on, we got entry criteria. And this is for any trend continuation or counter trend. We need clear stop loss and take profits. We need a minimum risk of 1 to 2. A trades are aiming for 1 to 3. Price must react at that defined area or structural level that we have marked out. And risk must be predefined before entry. Those are big ones, guys. This is how you save the account. This is how you keep from blowing an account. One of the ways you keep from blowing an account. No trade conditions. No clear structure or zone. We're mid-range chop. As most of y'all have heard before, don't diddle in the middle. The risk to reward was below 1 to 2, so we can't take the trade because the risk to reward ratio doesn't work out. Trade Funder does allow me to trade within news events now, but I kind of still keep that rule of don't trade within such. This is kind of flexible. I need to adjust this a little bit. But it's like I don't like trading through high impact news events. They're super volatile. So unless I really have my risk very well controlled and I'm really oh, I need to hold this trade because like this trade's doing what I think it's going to and I think the news event's going to support my theory. It's just very rare that I'm ever in the markets during a high impact news event. And you can find those on factoryforex.com, or if you work with Trade Funder like I do, you can go to the economic calendar and it will tell you what events you need to watch out for, which is really convenient. So then the big one, guys, this is what saves you in the long run. This is what keeps you alive, protects and preserves capital. This is the really important stuff here. Risk is dynamic, but is always controlled. Risk management, right? Risk is dynamic, but always controlled. Controlled is the big one. The goal is capital preservation and emotional stability. We gotta preserve capital and have emotional stability. And then by preserving this, what does that do? That preserves our mental capital. Mental capital is extremely important, right? You don't want to burn yourself out. You don't want to get exhausted. You want to be able to come into the markets every day feeling good. So our max risk per trade is $300. Actual risk may vary between $50 to $300 depending on our setup, quality, clarity, and stop placement. I've come up with this max risk per trade based on my history of consecutive losing trades. How many trades can I lose in a row and not blow my account? And what's my max that I've ever been in a bad losing streak? And I think that was at one point 5 to 7 trades of losing trades in a row. Well, if you risk $300 per trade for 5 trades, what is that? That's $1,500, right? So that's where I came up with that theory, right? And it's that's how I did the math to come out with how much I'm allowed to risk. Is I looked at my history and said, how many losing trades have I had in a row? And if that happened again, and we try not to let that happen, correct? Right? But if that happened again, how much could I lose and still have my account? And that came out to $300 max per trade. On a 50K account with a $2,500 drawdown. My daily max loss, $500. So pretty much that means if I lose a trade, my first trade, and I lose $300, guess what? My second trade is capped at $200 of risk. I'm downsizing. Because I'm not going to lose more than $500 a day. It's just too detrimental mentally, mental capital, emotional capital, right? I know that I can make $500 in a day or in 2 days with good, consistent trading. I don't ever want to lose more than I can make back in a day or two. Because I want to be able to preserve my account and get back to what I call account restoration, which is established balance. If you take some negatives, it's always very important to me to get back up to account balance because it resets you mentally and it allows you to come back into the market with a clean slate. Weekly max loss, $800. In this account that I'm currently trading, that happened. On Monday and Tuesday, I lost $400 in the account Monday, and I lost $400 in the account Tuesday. I did not trade the rest of the week. I took off 5 or 6 days, did not touch the markets. Completely had a mental reset. Came back into the markets, made that $800 back in 2 days, right? Preserved the account, and then continued to make money and get a payout. So weekly max loss. After $800, we stop trading and we conduct a full review before resuming, and we don't resume until the next week. Position limits. One open trade at a time, no stacking positions. Once you enter the trade, that's the trade. You don't enter more trades, you don't add to it. This is risk management. This is how we keep the account. This is how we preserve capital. We keep emotional stability and we preserve mental capital. This is the key to success right here, guys. Literally, this is one of the biggest things. If you take anything out of here, know what your risk management strategy is. Know how to manage your risk. Risk is measured in dollars and emotional stability, not in ego or streaks. Little reminders, they're always good to have. So mental checklist before entries. Am I trading structure? Am I chasing emotion? Do I clearly know which setup this is? Are my confirmations real or are they forced? Is my risk fully accepted? Then we have the journaling philosophy. And this is what I had to shift in recently, right? Because there was like guilt and bias in my journaling, and I'm like, well, how do I eliminate that? So I'm really collecting good data because I need data. The only way to get better at trading is to have real logical data. So my journaling philosophy, the journal is a laboratory, not a courtroom. It exists to discover which setups truly work, identify the confirmations that matter, eliminate execution mistakes, remove guilt, and increase clarity. And what I mean by all this is, okay, it's a laboratory because we're experimenting, we're getting data, we're collecting, we're seeing what works and what doesn't work. It's not a courtroom because we're not following a strict set of laws. We have basic rules, but you're not going to get fined if you break a law, right? You're going to learn from it, and we're going to take that data and we're going to see how we can utilize that data. We're not going to get thrown in jail for it, metaphorically speaking. And yeah, it exists to, again, discover which setups are actually working, identify the confirmations that truly matter, eliminate the execution mistakes by finding out what those mistakes are and how they affect us, and we're going to remove the guilt and increase clarity because that's what we want in our journaling. That's what we want in our data. And then just a little reminder, because I like to read this before I go into the market, right? Because it puts me in that right spot, and it's like, this is what I'm trying to achieve today in the markets. And so a little reminder, I do not need perfect trades. I need honest data and consistent execution. My edge compounds when my process is clean. I have an edge. That edge works. The cleaner I can execute, the more progress I'm going to make. So guys, this went a lot longer than I was expecting it to. Yeah, we've been on here for a good bit now. I think, what was that studio at? It's not even showing me anymore. But anyways, I'm gonna go ahead and end it here and close off. I hope that you guys enjoyed some of my little stories that I had to offer you. I hope that you guys were able to take some information out of this, and just learn a little bit about how maybe you can improve your trading, how you can improve your strategies, how you can improve your journaling. Again, this was a really good way for me to test my live stream. It's my first live stream on this account. Uh, I've been able to let you guys know that my phone wasn't working. So, anyways, hope you guys got something great out of this. Catch me live. I'm going to try to start streaming the actual trading markets in the mornings on the New York market going forward. We'll slowly start to figure out what that timing is going to look like and how much I'm going to be doing that. But hopefully we can catch some good trades together. We can learn together and we can grow together, guys. Hope everyone's having a good day, afternoon, morning, wherever you're at in the world. Take care.